What's up, everybody? Clark Spalding, your mortgage Superman, here with Mortgage Myths episode number 1. Today, we're going to be covering 3 common misconceptions I see come up a lot whenever I'm talking with new clients. So let's dive right in and debunk some mortgage myths so that you are better prepared when it comes to buying a home. Now, mortgage myth number 1. This one still surprises me a little bit, and that is the fact that a lot of people still believe that you have to have 20% down in order to buy a home. Now, this could not be further from the truth. There are so many programs out there where you can buy a house for as little down as 3.5% or even 3%. And that is assuming that you don't go the down payment assistance route. There are a lot of scenarios where you can come to the table having no down payment whatsoever. So if you or someone you know has been told that they have to have 20% down in order to buy a home, please let them know that's not the case. You can get it done for as low as 3%, 3.5%, maybe even 0% down. So you mean I don't have to have any money to buy a house? No. And this rolls right into mortgage myth number 2, which is that your down payment is the only thing you need to save up to buy a house. You see, there are a variety of other costs that go into buying a home, and these are called closing costs. Now, a lot of people get really excited once they get their down payment saved up and they think they're ready to go buy a home, but they don't realize that there's another 2 to 6% on top of that that they need to have that are closing costs. There are scenarios where you can get the sellers of the home to pay these for you, but it's better not to count on those. There are a lot of different companies that are involved when it comes to buying a home. You have your lender, you have your title company, you have appraisals, you have inspections. All of these and some more all roll into those closing costs. So make sure you account for these closing costs as well, and don't get stuck pulling them out of your down payment that you saved up so hard for. And last but not least, mortgage myth number 3. This one is near and dear to my heart because I feel like I deal with it on a daily basis. And that is the idea that everyone has the same rate and it's determined by the mortgage company. You mean there's not just one rate? No, there are a ton of different factors that go into what determines your mortgage rate. Factors like what's your credit score? How much down payment are you putting down? What type of home are you buying? What loan program are you using? And how much is that lender charging? All of these factors are going to influence your rate. So, for instance, if you and your neighbor Tommy are buying houses at the same time, more than likely you won't have the same rate unless you live the exact same lifestyle or putting down the exact same amount of money or buying the exact same house and are using the exact same lender, which doesn't happen a lot. To sum this all up, you don't have to have 20% down. Keep in mind your closing costs, and your rate is going to be different from your neighbor's. If you found this video helpful, please let me know. I love good feedback. I'm Clark Spalding, your mortgage Superman. See you next time.